Chuck and the Market's Up, Chuck. Today's post was titled, How to Research a Company, based on an article I read where Warren Buffett and Jim Rogers were talking about how they research a company. And it's, fundamental investors like that, when they tell me something, I always pay attention. And, the beauty of it is, of course, and I'll admit to this, that, their process of researching a company is very analogous to the one that I believe in. So obviously I liked it, and I didn't want to share it with you. And, what they talked about was, having some knowledge, just reading everything you can about the company that you're interested in investing in. And then the article also talked about how Jim Rogers always likes to have a 10 or 15-year spreadsheet laid out where he can look at all the fundamental data on a company historically. And it also mentioned the fact that there was very little forecasting done. What he was really trying to determine was what kind of company was it, how has it performed historically, and if there was anything wrong with the company, what had happened, and he wanted to know why. So, looking at Kohl's, retailers are, currently hot right now. They're all reporting same-store sales and so on. You can see when you look at Kohl's from an earnings perspective, the company has, generated a very strong earnings growth, actually, of 17.6%. You can see that, back here in 2003, they had a down year, and the question might be why. And then, of course, they had a down year in 2008, which is not a surprise, and expected to have one in 2009. But as we go into 2010, then it's looking like there's going to be some recovery. I want you to notice the importance of valuation, where the stock does track earnings, and you can see based on the track record of Kohl's that their 15.8% return, in contrast to the market's 3.4%, is very strong. It correlates to the growth rate of the company. There was a little bit of overvaluation starting this period. It kind of ended valuation. That explains the difference between 17.6 and the 15 to 16% that it actually generated. But another thing that when I designed this fundamental research analyzer tool initially, I designed it to facilitate the process that Mr. Buffett and Mr. Rogers talked about. You notice at the top here, there's a website for the company, so I can merely click on the website of the company. And by doing that, I go right into the website. Now, when you go into retail companies like Kohl's, the first thing you notice is the website you go to, of course, is their online store, where they're obviously promoting their merchandise and selling. But I actually like to peruse those a little bit because I can kind of get a feeling of what the company's like and what the retailer in this case is like. But I want you to notice down here at the bottom they have their websites, and the one that you ultimately go to is Kohl's Corporation. And when you go into Kohl's Corporation, the actual company, then you get into a different area. When you get into the Kohl's corporate site, now you get into places like investor relations. You learn things about the business and the company now, which, to me, is what Rogers and Buffett were talking about. But again, I like to actually look at their store also because it gives me some insights into the company. But when I go into their investor site or their corporate site, one of the things that I find over here on the left is I find annual reports. And as Warren Buffett and Jim Rogers talked about, you want to read those annual reports. So if I wanted to know what happened in 2003, as I showed when I was looking at the chart where we were looking at the earnings drop that they had, I can go into 2003, 2004 annual reports, and just by clicking on these links right here, I'd be able to come up to them, and I can find out what was going on, because obviously in the chairman's letter, or president's letter, or whatever, there's always going to be usually going to be a discussion of what has gone on over the last year or so. So I could look at 04's annual report or 03's annual report and even 02's annual report and probably get some insights into what actually was happening. So the moral of today's story is really quite simple. It doesn't take a lot. People try to make this more complicated than it is. It's not as difficult as it appears, but it does require that you do your homework and you're thorough. So, by looking at a 15-year history of a company, I get a tremendous insight into how well the company's been managed. I can also see how the market's been treating it, although I'm not real interested in that because, as you hopefully know, of those of you who have been following this blog, when stocks get disconnected like they were here in Kohl's case, they always come back into value. When they get underpriced, they come back into value. But the point is, I can learn an awful lot about a company just by reading information that's readily available to everybody. Because remember, I'm focused on the business. I'm not trying to make stock market bets. What I'm trying to do is understand the business, learn what makes it tick, what its profitability is, and then try to determine whether I want to be a long-term investor in that or not. This is Chuck Carnevale saying thanks for listening. This is Friday. Once again, we won't be doing any posts over the weekend, but we do intend to be starting up again on Monday. So, have a great weekend and tune in again on Monday. And we appreciate you listening and look forward to talking to you in the future. Thanks.